Hi, this is Joseph. It's Wednesday, August 7th, 2013, and we're currently looking at the pound dollar. This is the 4-hour time frame, and you'll notice this price point right here. This is just a spot that we've actually been looking for as a potential target based on this retracement down here with this Fibonacci tool drawn here on this chart. Again, this is the 4-hour time frame. So for the last 3 weeks or so, my analysis continues to be that price here on the pound dollar would most likely continue, and I have a profit target here of approximately 1.5550. Now again, that was based on this Fibonacci retracement and this price swing. So we had a new low, this A low, and then this B high, and then the 382 retracement. And based on the depth of this 382 retracement, this was my first projected profit target. Now, there are a couple of different ways that I prefer to trade this. I certainly can use the trading strategies that I teach and that I recommend using on the 1-hour time frame. I use them on the 4-hour and the daily chart for swing trades, but I also prefer to get into the trades daily and to make money every day rather than to hold on to one trade for 3 weeks. Not that there's anything wrong with that. It's just that my approach, I prefer to day trade, and so do many of my students in the Alumni chat room. We are trying to more or less get into a trade and get out of the trade within the same day, market providing the opportunity. So this trade, again, as I've mentioned, has been in place for approximately the last 3 weeks. With each weekly analysis video that I make on Sundays, I continue to update this particular pair. So again, based on the depth of this retracement, the Fibonacci retracement, this was my Fibonacci extension target. This was one of them. There are others beyond this, but this was the first one, and I've been holding on to and looking at this particular target for quite some time now. Again, it is possible, as I've said many times, it is, and we all know, you probably are well aware that it's possible to trade opposite the main trend. So you can, more or less, if this is an uptrend, you can sell this pair for a week or two if the conditions are appropriate. Now, as of today, the high here on this particular MetaTrader platform reads a high of 1.5530 approximately. And again, that target was 50. And I'm going to show you a particular trade that I called in the chat room, and I traded with my students in the Alumni chat room today during the London session. And it was, of course, in the opposite direction of this trend, but then we prepared ourselves for the possibility of this pullback. So let's go to the 1-hour time frame. We earned approximately 55 pips on this trade. So just about where the London session began, this is obviously the spike down here was during the London session. This was at approximately 5:30 a.m. New York time. And if you traded today and you traded the pound dollar, you're probably well aware of some of the comments and the information that we received from the Bank of England. Statements, comments, things like that that are associated with oftentimes moves like this that can be pretty significant. And what we had here is, I'm going to show you first of all the entry, and then I'll remove that one price point, that price marker right there. The entry on this particular opportunity to sell this pair, and by the way, this technique is the continuation breakout trade. We had an entry of approximately 1.5295, and whenever I use this continuation breakout trade on the pound dollar on the 1-hour time frame, I am using a 55 pip stop and a 55 pip target, and you can see where price reached its 55 pip target here. Now, I will go to the 30-minute time frame and I'll show you exactly what happened. This is what it looked like just prior to that 5:30 candle and the reaction to the economic data. It was more or less sitting right around the 1.5295, 1.5292 area. It was sort of hovering around that area for a few candles there. You can see about 3 candles that it's just more or less bouncing around, and just within the last few minutes of that 30-minute candle there, it starts to close down to the downside, and then you get that reaction here, and it immediately dropped straight through to our target. And we again earned 55 pips. So it is possible, of course, to trade opposite the main trend, which is exactly what I showed you here on the 4-hour time frame. There's that spike, but you got to do it carefully. You've got to know exactly when the right conditions are, what would cause such a reaction like that, what is the economic data that could be the catalyst or the fuel to have price move to those potential targets. So here we earned, again, 55 pips on this continuation breakout trade. You'll notice that signal candle right there that closes below this consolidation range. Everything's lining up just the way I want it to as far as confirmation on these indicators. Again, this is the 1 hour time frame that we're looking at. That's where I identify the actual signal candle. Now I wanted to show you one other trade. We took a trade here on the pound yen. This is the pound yen. This is the 1 hour time frame. And here we had a continuation signal candle to the downside. This was an opportunity to sell this pair. So again, back with that 3 pip entry that I need with this particular strategy, again, when I use this technique on the 1 hour time frame, I'm generally looking at a 250 pip final target. However, I do need to take into consideration where overall support or resistance is. And here we had a level of support over here to the left. Now, it doesn't necessarily mean that I can't trade into it. And there has to be a significant reaction or something that's going to move price. So keeping an eye on the yen, keeping an eye on any economic data that would affect the pound, all of that can have an impact here on this particular currency pair, this cross pair, the pound yen. So what we did is we just looked for a basic 200 pip target. We weren't really too sure what was going to happen as a result of the economic data at 5:30 a.m. this morning out of the UK. But it did have a reaction, which is what we were counting on. And our entry for this pair, for this trade, was an entry of 149.87. Now you'll notice that on the signal candle, I didn't get the entry on the next candle. I had to wait 1 hour, 2 hours, 3 hours, 4 hours before I actually got the entry. And that is not uncommon. It's just that every time the trade is going to be different. Here we used a 100 pip stop just to start it off, but the retracement, you'll notice after the entry, only went as high as 150.15. So it really wasn't even more than 45 pips as a retracement. And that is very common when I use this technique. If it's done correctly on this continuation breakout trade for the pound yen, even though I'm looking for a 200 or 250 pip target, it's very common to only see a pullback or a retracement no more than maybe 45 or 50 pips. So it's more than a 2-for-1 reward to risk ratio on this trade. It's an awesome trading strategy. So you'll notice just how many hours it actually takes. And then as a result of the economic data that came out of the UK, there was that spike down, and here's where it hit our 200 pip target. Why did we pick 200 pips? Again, we traded this in the alumni chat room. Me and my students, I call this trade out live along with the pound dollar that I showed before this trade here. I stay in the chat room and I tell everyone when I'm getting in the trade. I tell everyone when I'm getting out of the trade. I show you my charts. This is exactly what everybody else did. And the reason that I picked the 147.80 as opposed to a 250 pip target was the fact that we were seeing this economic data out of the UK and how it was also reacting with the pound and also what was going on in the yen. If we find any potential levels of support, anything that could have some kind of confirmation or show us the possibility of price slowing down, we want to lock in those profits. But it's also a psychological level. I'm very into trading to psychological levels as well as specific profit targets. So if a specific profit target lines up with a psychological level, it's definitely a level that I'm going to trade to. So here we earned 200 pips, and then again, as I mentioned, we also earned 250 pips here on the pound dollar trade. Again, I call these trades out live in my alumni chat room. I had one student today who was trading all standard lots, meaning he was earning about $10 per pip. And he took both of these trades, the same ones that I just showed you here that I called out in the chat room, and he traded a total of 5 lots on each trade. So I need to share with you, first of all, you have to have sufficient capital to be able to trade at that level. But he earned approximately $12,500 today, trading just these 2 strategies here, just these 2 techniques that I called out live in the chat room today. $12,500. It was an awesome day for him. It was great to see him post his comments and for everyone to show their support with him as he was making the money. But the bottom line is, will this work for you? Or can it work for you? And the thing that makes the biggest difference is having someone to share this information with you and to teach you and to show you how to do it correctly. And that's what I'm here for, to get you as quick as possible to your goals of achieving profits just like this. Now, the next coaching class starts August 20th. That's on a Tuesday. And if you'd like to sign up for the next coaching class or to get some information about it, just enter your email address in the box that's provided to you on this page, and I'll send you the information right away. Thanks for watching, and I hope you had a great trading day.